Welcome to Let Me Fix This. Enjoy the video.
You begin by confirming prerequisites: verified account, two-factor authentication active, and funds deposited. Open a basic market or limit order screen. Pick a base pair such as BTC or UST because liquidity matters for fills. Once done, set your initial order size relative to portfolio risk. Use a fixed percentage, for example 1% to 2% per trade. Also make sure to review fee tiers and withdrawal limits, so there are no surprises when you scale positions. You now analyze price action and volume across at least 2 timeframes to time your entry. Higher timeframe trend gives context while lower timeframe pinpoints execution. Then choose an order type: limit to control price, market for immediacy, or stop limit for conditional entries, so you match intent with execution. Next, place stop loss and take profit levels based on recent support and resistance. This locks in risk management. Finally, size the trade so a breach of stop loss equals your planned dollar risk. You close trades either at your take profit or when price invalidates your thesis. If the trend continues, trail your stop to protect gains while letting winners run. After exit, immediately log the trade: entry, exit, slippage, fees, timeframe, and your reasons. This fuels learning and repeatability. If a trade won't execute or confirmations fail, first check balances, non-C or sequence limits, and network fees. Then contact exchange support if deposits or withdrawals are stuck.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.